everyone, and today I am joined by Phoebe Stone, partner and head of sustainable investing at LGT Wealth Management. And today we're looking at the second part of our discussion on sustainable investing. So welcome back, Phoebe. Thank you so much for joining us again.
No problem. Thank you for having me.
My pleasure. So really today looking to just drill a little bit deeper, sort of get into some of the nitty gritty, if you like, around sustainable investing and kind of open the bonnet, if you like, on the portfolios and how we go about constructing them. So to start with, it'd be really interesting just to get a bit more insight into the sort of investment and research process. So if you're considering a fund or a company for inclusion in the portfolio, sort of what's the process we have to go through to get to that point where the fund gets the green light and we're happy to then start including it within client portfolios?
Yeah, so all of our research is done in-house. I think it's really important to state that at the outset. It's how our business was set up in 2008, having real experts internally that you can call on and have those robust discussions with. So if we're looking for a fund to fill a gap in a portfolio, let's say we think there's going to be real value in smaller companies based in the US, and we want to deliberately go and select a fund to invest in that part of the market, we would initially do a bit of due diligence and create our universe. That's done manually rather than through an automated screening tool because of the nuances of sustainable investing and the fact that you can't just put in a certain set of factors and then draw up a list of 100 funds. So we do that on a manual basis. We've got an incredible network across the asset management industry here in London, although also in Europe there's a number of funds, and we'll call upon our colleagues over in LGT Europe to help us touch base with any if need be. Then we go around the first round of meeting the fund managers. It's really very important to see the whites of the eyes when you're going to invest in a fund, meet with the team that are managing that fund, understand their drivers, understand the intentionality and their desire to allocate capital to sustainable companies. It's extremely easy to really realize at that stage whether it's the right fund for us. We do have high thresholds, we do have high barriers to get into a portfolio. We really want really passionate individuals running portfolios, and because of the drive in ESG, there's certainly cases where we meet a fund manager and there isn't as much passion or as much authenticity as we would want. So that list gets cut down quite quickly. We then look to understand the investment process, how resourced that team is, what kind of asset manager it sits within, what the asset manager's commitments are to sustainability and net zero and diversity. It's really important to have that reflected at the asset manager level as well as at the underlying fund level. And then we look at the underlying holdings of the fund. We put them through various screening tools that we've built internally, both from a financial quantitative perspective, so looking at how robust those underlying business models are of the companies. Is the fund just selecting in loss-making, very speculative companies, or is it investing in very good quality businesses and it's able to demonstrate that? But also from a sustainability perspective, we've built our own internal tool in order to analyse environmental, social and governance factors of the underlying companies and analyse the impact. So within the tool, we use the UN Sustainable Development Goal framework in order to think about impact and look at every company in alignment with that. So after all of that process and we're comfortable, we'll probably have a short list. We then meet the managers again, meet everyone in the investment team, and then make a final decision on the fund that's right for the portfolios at that time.
Brilliant. I think you mentioned there that the UN's Sustainable Development Goals, I think, is there 20 in total?
17.
17. So, we could probably spend an hour talking about each of those in isolation. Might also be interesting if you could just give investors a little bit more insight on the EU definitions when it comes. I know there's two different categories or two different sets of standards to which companies are held from a sustainability perspective as far as the EU are concerned. And again, this is just getting a little bit more attention now as well.
Yeah, so there's a whole wave of regulation coming our way, and this is specifically for the financial services industry. The idea behind it is twofold. First of all, to allocate more capital to companies that are sustainable, and there's a deliberate desire by the Chancellor and the government here in the UK, HM Treasury, to do that. And you can look at some of the papers that have been released by Rishi Sunak, who published it last year. But you've got something similar happening in Europe. But the other element of all of this regulation is certainly around removing the risk of greenwashing and trying to avoid clients, customers, retail customers going into something that's labeled sustainable, labeled ESG, and in fact absolutely isn't when you look at the underlying holdings. So the regulation in Europe is called SFDR. I'm sure people are watching this video have never come across it, and I really hope you don't. It's extremely detailed and actually quite confusing in many places. Here in the UK, because of Brexit, we haven't had to implement that European set of standards. Something called the EU taxonomy, which effectively is a list of activities that are deemed as sustainable. They've got the green environmental taxonomy sorted. They're still working out what the social taxonomy looks like, what's okay and not okay from an activities perspective when you're thinking about sustainability from a social perspective. Now, we are going to, in some way, copy that same regulation over here in the UK. It'll be referred to as SDR, so very inventive name there, just dropping one of the letters of the acronym, Sustainable Disclosure Regulation. But I think we'll mirror a very similar set of rules. It hasn't actually been released yet, and we've been a little bit surprised. I think the FCA have probably got a few other priorities potentially, but also really trying to grapple with the idea that they want to gold standardize the European regulation. So not just carbon copy it, not just sort of lift it and drop it, but actually build on it and make it better for the UK audience. And it's probably that's taking a bit of time. Interestingly, the US, who are quite behind the curve when it comes to European regulation, have leapfrogged us now, and the SEC, the US regulator, is looking to introduce a lot of European ESG regulation in the coming months.
Wow, incredible! I think it'd be really interesting just to again, peel back another layer of the onion here, go a layer deeper. Are there any specific themes, if you like, within the ESG world that you're building into portfolios that you're getting excited about in terms of the future investment opportunity there?
So there are a huge number of different themes, and the environment that we are in right now. So we're recording this in June 2022, and it's been an extraordinary year. You've had a year where investment markets have very quickly got used to the idea that inflation is not going to go away anytime soon, that interest rates are going to go up to try to tackle that high level of inflation, that businesses that are seen as quality growth companies are struggling a lot more than companies that are seen as value businesses, ones where you're able to value the cash flows in the short term in a much more easy way, compared to those growth businesses, those innovative growth businesses that we may have in the sustainable portfolios, where the growth will really come through 5-10 years down the track. So it's harder to value those cash flows. Although it must be said, those companies with the cash flow generation, the 5 to 10 years down the track, are much better long-term investments because of everything that's going on around us, because we're struggling with climate change now on a very regular basis. You hear newspaper reports of extraordinary climate conditions, because we're struggling as a result of the war in Ukraine with a food crisis. These longer term trends are only getting stronger. And if you had said 2 years ago that you're going to, or 3 years ago that you're going to have a pandemic and that's going to drive the sustainable agenda, and then you're going to have the outbreak of war in Ukraine, and that's going to further provide catalyst for investment in renewable energy, in food security, you wouldn't have believed it. But certainly the things that are going on around us and the themes that we're most excited about are solving some of these challenges. So looking at themes like regenerative agriculture, precision farming, thinking about creating crops that are able to be resilient against certain bugs, certain climate conditions, thinking about climate adaptation, which is certainly not something we can rely on. We need to make sure that we're tackling carbon emissions and then having climate adaptation as a real last resort. But these are all really interesting investment themes that are starting to play out already, and some of the best performing companies in the portfolio since the start of the year have been invested in those trends. But certainly trying to grapple with the short-term noise of markets, which is all about inflation, it's all about interest rates.
Wow. I suppose, speaking of companies, perhaps you could just give us a couple of examples of some, we're going right down to the center of the onion here, I guess, using that analogy. Just some of those individual businesses that sit within the funds contained within the portfolio, perhaps some that you're most excited about from an ESG perspective. Perhaps if you could give us one sort of, big ticket household name that people will recognize, and then perhaps a more niche business that's doing something innovative or interesting.
Yeah, an example of just carrying on that theme of sustainable agriculture, a company that I think most people will know, unless you've never gone out to the countryside or seen a field, is a company called John Deere. So very famous tractor manufacturer. I grew up in the countryside, so constant battle between Massey Ferguson and John Deere is very live to me. However, John Deere has evolved a lot since just being the manufacturer of physical tractors. And those of you who have seen Clarkson's farm will know that it's now possible for a farmer to be able to map a field with regards to the geology, the soil makeup, the slope, the type of crop that you're going to be growing on that field, and using that information and satellite imagery and geospatial imagery and information, it's possible to care for your plants in your field and produce crops in a much more environmentally friendly way. An environmentally friendly way, for example, by being able to apply pesticides in a very precise manner just to the plants in the field that need it. So avoiding this mass spraying whereby you're destroying the soil, you're destroying many layers of that soil structure, you're potentially spraying the chemicals into a nearby spring or nearby river, sorry, lost my train of thought there, nearby river, damaging waterways, but also from a farmer's perspective, minimizing the cost to a great degree, because the cost of fertilizer as a result of the natural gas price going up enormously has gone up many fold. So this is a company that used to be just making physical and very expensive tractor machinery, and now is being seen as a software as a service type business. Wow. And is helping farmers improve biodiversity, increase yield, and treat their farm as a sort of asset that they need to look after, rather than just reap as many crops as they can in the short space of time. That's my main. Go on.
Yeah, that's a great example, and I think it highlights something which I've always tried to point out really with sustainable investing, which is to say that these things are not always totally black and white. This isn't a sort of binary yes or no, because of course if you say John Deere to me, like most people, I conjure up images of sort of ginormous combine harvesters that have probably got 12-litre diesel engines in them or something.
Yeah.
But if we accept that we need machinery to harvest crops, I guess the question is, how do we make that as efficient as it possibly can be? How do we reduce the impact as much as it can be reduced, on the assumption that of course we need food, which is another area of sustainability, food security, which feeds into this. That's a fascinating example. Is there a more niche business that you're interested in at the moment that sits within the portfolios as well?
Yeah, there's another company called Tomra. So it's a Scandinavian recycling business. The company has really reinvented the way that certain countries recycle. So countries like Germany have had their recycling system completely given a facelift as a result of this company's technology. So rather than putting your used bottles and cans and plastic items into a box outside of your front door, like we do here in the UK, Tomra's system now enables you to take those used bottles and cans to the supermarket when you go for your shop. You feed them into something called a reverse vending machine. So rather than getting something out, you're putting these used bottles and cans in. You actually get paid to do so, a few cents for your bother, or you can use that to redeem against your shop. In the back end of the reverse vending machine, there's sensor technology, which is really the IP of this business, that can sense the type of the plastic, the shape of the plastic, whether it's bioplastic, virgin plastic, recycled, 50% recycled, 25% recycled, and sorts all of those bottles and cans very, very effectively and efficiently, and puts them back into the system, whether it's the product being used automatically again, or being broken down and that aluminium being recycled and used, or that plastic being recycled and used really, really effectively and efficiently. So it's got levels of recycling in places like Germany to 99%.
Wow.
And more importantly, that system is extremely quick. So you haven't got a load of kind of waste packaging always hanging around. Here in the UK, it takes upwards of years for once that you put that thing in the box at the end of your drive or outside of your house to be collected. The system is very, very inefficient. It gets taken somewhere, and as we know, every borough or part of the country has a different process and set of rules. The sorting of it all takes endless amounts of time. They don't have the sensor technology. So this company is now, Tomra, is now operating in 60 countries worldwide. Wow. And its IP is some of the best in the business with regards to increasing the efficiency of recycling systems.
Phenomenal. It's just remarkable what technology is doing. And I think it's really interesting, even on the sort of, the micro business end of the spectrum, even if you just watch something like Dragon's Den nowadays, it must be 50% plus of pitches are now trying to solve some sort of ESG problem. Even the ones that don't are being put under much greater scrutiny in this respect as well. So this really is entering the business world, not just talking about much more developed businesses, but even the sort of micro entities that are just starting out as well are probably having a far greater focus on sustainability.
Yeah.
I suppose just the final subject for today's conversation, be great to get your take on performance of sustainable investing. Of course, most individuals will want to see a healthy performance from their portfolio, whether it's sustainable or otherwise. So it'd be great to get your views on how sustainable investing has performed perhaps over the last 5 or 10 years, but then also just a broad view on how you think it will perform in the future.
Yeah, so there's been a few different market environments that we've moved through in recent years, and sustainable portfolios, as a result of this real shift in the interest rate environment that we've experienced, have come under more pressure than more traditional portfolios. But then again, traditional portfolios, again for the same reason, certainly have had a tough time. And in an environment where there is uncertainty around what that will mean for the global economy, what that will mean for businesses, how will they deal with increased inflation, but also the increased cost of servicing debt if they have any potentially less consumers, because there's a little bit less money in the pocket, potentially a lot less money in the pocket of some investors, some consumers, and so their revenues are potentially challenged. All of that, without wanting to undermine it, is something that we're tackling in the short term. And really, sustainable investing looks to identify companies that are going to make or going to be part of systemic changes to our manufacturing processes, to our recycling processes, as I mentioned in that example there, to our ways of working. In some cases, it will be unrecognizable in just a few years. An example I would give is something like Tesla. Would we really have expected so many cars today to be electric cars? In March this year, so March 2022, there were more electric cars sold than the whole of 2019 here in the UK. So it's fundamentally changed the way that the automotive sector is set up, because it's not just Teslas that people are buying. Because of the impact of Tesla and the dominating force behind that business in Elon Musk, every car company now has an electric range, and that simply wouldn't have happened without that. So within the sustainable portfolios, we're not investing in Tesla because of some pretty obvious corporate governance issues. But we are looking for those kind of disruptive companies or themes or technologies that are coming through that will change the world around us. We are likely to see higher levels of growth in many of these parts of the market. Whilst we might be in an environment where there's lower growth across the world economy, that will not be the same depending on sector, depending on country, depending on type of company. So it's our job, through a sustainable lens, and I think a lot of these growth drivers will be sustainable growth drivers. To your point, that's why all these Dragon's Den's applicants are investing in this space or looking to launch in this space. Identify the trends and the themes in which we're able to generate positive and strong and reliable and consistent returns for your clients. And I really think the sustainable landscape lends itself to those high growth trends. We need to fix climate change, we need to fix recycling, we need to fix food security, we need to fix education and healthcare. And these parts of the market, I think, will experience higher levels of growth than the sort of market more widely. That's not me promising outperformance by sustainable portfolios, but certainly I think the opportunity set is extremely exciting for the next few years.
And well, one final question, if I may, just to kind of develop that a little bit. I think it's fair to say when it comes to sustainability, there's a huge amount of both carrots and sticks going on at the moment. You know, of course, governments are legislating that, you know, there's sort of polluter pays type legislation now starting to develop, but equally companies are being rewarded for being more sustainable, both by governments in terms of incentives, R&D credits, tax reliefs for green investments, but also they're being rewarded by consumers. You know, consumers, I think it's fair to say, are making more active choices in that direction as well. So do you think we'll ever reach a day where sustainable investing is no longer a separate branch? Do you think we'll reach a point where sustainable investing kind of merges back into just the investing world? Or do you think there'll be, you know, another vanguard? So, you know, if the rest of the world moves to here, the sustainable investing world moves over, you know, it continues to kind of be at the forefront of this drive.
I think if we think about ESG investing, then that may not exist for a huge amount longer, because there's such a great understanding now that ESG information, environmental social governance information about a company, is an additional helpful risk lens. So I think that concept that some people think about ESG as a data point set, which is helpful, and some people think it's nonsense, I think that will go away. I think that's being kind of gradually over time accepted as important information that all investors should take into consideration. I think when it comes to sustainable investing or impact investing, only investing in companies that are providing solutions, I don't think that will become the only way to invest in the short term, but I do think it'll evolve. There'll be more companies that start to become public and investable in portfolios because they know they're going to be able to get that support from the investment community. All of those companies that are the Dragon's Den applicants may become VC, right, venture capital type companies, and then go up that spectrum and become, you know, the dominant companies of tomorrow. So I think if ESG is sustainable, if normal markets start to incorporate ESG as standard, I think that sustainable and ESG section will become impact investing, and that will become bigger and bigger. And that's exactly what we need. We need more we need more allocation of capital to those businesses.
Wonderful, that's great. Well, it's been a fascinating conversation. Both parts of the video actually have been really interesting, and I'm sure our clients will really value some of the insight that you've provided. So thank you very much for your time, very much appreciated. We may look to follow up these videos at some point next year, and we'll get an update and see how things are doing performance-wise as well. But for now, thank you very much for being with us. And
absolute pleasure.
We'll speak again soon.
Thank you. Thanks very much.